Hi everyone, my name is Lara Biermann and I'm working for Schumann, and I'm sitting here with Phil Bonner. Phil, can you please introduce yourself and the company you work for in a few sentences?
Sure, yeah, nice to be here. Thanks for asking. My name's Phil Bonner. I work for Tiger Risk Partners in London, a reinsurance broker. That's been my background for the last 17 years, and prior to that I've been underwriting for 20 plus years, always on the credit side, which is what I do at Tiger Risk.
So you will be participating in the panel discussion MGAs and MGA trends. Can you give us a little introduction to the panel, what it is about, and maybe why we shouldn't miss it?
Sure, no, it's exciting to be asked. MGAs seem to be a hot topic these days, although MGAs have been around for many years, not so much on the credit and the structured credit political risk side of the business. But it's becoming more sort of a phenomenon in recent years. So we're really talking tomorrow about why that is happening, why we think MGAs have a role to play in the market, and why people should listen to that is because I think, you know, it is an important topic. Our market is a niche market, but it's a very specific product type, and so anything that brings some attraction and interest to the market is important for, certainly I think, for everyone involved in this class of business.
We're always talking about MGAs, but can you maybe explain to us briefly what an MGA actually is? What's the specifics?
Well, MGA means different things to different people, but basically an MGA is an underwriting, in this context, an underwriting operation that either has access to skills or distribution that others don't, and therefore they have the ability to attract what they would say is good quality business that others don't, and therefore add to a portfolio or to a carrier. An MGA requires paper to write, and the carrier is the carrier that supports that underwriting or distribution, or hopefully both. So it's just another underwriting operation at the end of the day.
Okay, so Phil, we see a steadily increasing number of MGAs, especially in the credit and surety sector. Can you explain to us why they are gaining more market influence, why there are more MGAs than we've ever seen?
That's a fairly difficult question to answer, I think, because I have my views which might not be shared by everyone. I think certainly MGAs have been around. I think they've been around for a long time. They cover most classes of business and have been very successful over many years now. I think it's more a phenomenon maybe in more recent years, partly because of where we are in the market and the structure of the market, the underwriting sort of function within the corporate sort of organisations perhaps doesn't always lead to sort of career development. You become a very senior, very very capable underwriter, but that sort of maybe is one part of the job. I think if you're an MGA, maybe more entrepreneurial in nature, and that brings in a whole host of skills and exercises other than just the main one, which is underwriting. You have to run a business, you have to run a team, and all the associated HR, the compliance, the regulatory side. You are your own businessman. So I think in terms of our products, they've become more complicated over the years, and I think people see opportunity, and I think an MGA provides the flexibility and the ability for people to really back and develop their own businesses. So I think if they have those niches that they see are applicable, then the MGA route is quite often a very sort of positive way that they can influence their business and their views.
So, Phil, with your experience in reinsurance broking, what do you think are the greatest challenges that MGAs are facing today?
I think one of the views of MGAs is that they're short-term in nature, and I think that's one that you can discuss that, and that's something we may be discussing tomorrow. But I think one of the things that reinsurers look to, certainly on the credit lines of business, is longevity, is a relationship through the cycle, whatever a cycle means, whether that's 5 years, 7 years, 10 years, 15 years. Cycles seem to have changed these days, but I think they are looking for long-term relationships. Obviously some of the underlying policies these days are longer in tenor. They go from anywhere from, you know, an annual policies or less up to now, you know, depending on the types of deals you're looking at. Some of the structured deals, some of the project finance is 20 years plus in duration. So they're looking for long-term support, long-term relationship if they're going to support an insurance company or an MGA. My view is that not all MGAs are equal and not all companies are equal. So I think you have to look further into that underwriting, further into the structure of those MGAs, and further into the people and the reasons behind those operations. But yes, I think there is a little bit of reticence about the longevity of an MGA. So why give my support to someone if it's not going to be there in a year or 2 years or 3 years?
Thank you, Phil Bonner. That was very insightful. And if you're interested in seeing the entire panel discussions, MGA and MGA trends, then please click the link in the description below and see the entire panel with Phil and some other market participants. Thank you.